Hello, welcome to the Behavioral Finance Dialogues on Corona Crisis video series. My name is Gulnur Muradoglu. I'm a professor of finance and director of the Behavioral Finance Working Group. I work for the School of Business and Management at Queen Mary, University of London. Today, I will be speaking with my colleague, Summers Higgins of Nationwide. We will discuss risk assessments and organizational decision-making during the Corona crisis. If you enjoyed this video, please share it and subscribe to the Queen Mary University of London YouTube channel. And please come back and listen to the other talks in the series. Hello, Summers. Thank you very much for coming. So I'll start with the basic question to you. During the Corona crisis, are there any changes in risk assessments and related organizational decision-making processes?
Yes. So I think there have been a number of changes to the way that we undertake risk assessments and also the way that we make decisions. And I think it's broadly driven by the pace with which things are changing. So, you know, in the space of a month, the number of cases have grown exponentially. The number of people on furlough and who've lost their jobs have grown exponentially. And so therefore, customer demand for support from their financial services firms has increased exponentially. And so we've had to make very quick decisions and undertake really quick risk assessments as part of those decisions to enable us to implement change really quickly. So whereas normally decisions would be made through monthly committees and forums and the likes, we've had to spin up much more frequent decision-making bodies. So we've set up cells that meet on a sort of daily basis. And they feed up to the Nationwide leadership team with sort of decisions and information and action that they're taking. I think the other thing is that a number of the tools that organisations use to make decisions and to evidence the risk assessments and the rationale for their decisions are quite heavy lifting in nature. They're very detailed, they're very robust, which is right, and the right thing to do and what's absolutely necessary in BAU world. But to give an example, you know, product launches in big organizations can take 6 months. Material, service and process changes can take 3-4 months. You don't have that time in the COVID crisis. You know, there would be times where we had a week to implement our payment holiday arrangements. And so completing the standard tools, you just didn't have the time to do it. So what organizations have to do is they have to create sort of tactical and interim alternatives, which enable you to demonstrate and go through the key processes of decision making without all of the detail. So for example, we have an initiative development framework, which is the tool we use for any service or process or product change. And historically, that's 25 pages long on average, with loads of detail about risks of each of the things, the target market of the product, the customer experience, the value for money of the product, all these things. And you need a huge number of people to fill that in. What we've had to do is develop a light version of that, which is probably about 5-6 pages long, which we're able to complete and get approved outside of the standard governance in the space of a couple of days. But what it does really require is it requires multidisciplinary teams. So whereas beforehand you'd have a decision made by one committee over here, credit committee, one committee over here, conduct and compliance committee, one decision over here, our ops risk committee. Now what you need is a group of multidisciplinary people together, working on this thing together and making decisions together, which is where those cells come in really handy, because you have that multidisciplinary team together, which reduces things like groupthink, and helps to ensure that you get that rounded decision making in place.
I mean, probably there will be changes in both risk assessments and organizational decision making after the lockdowns as well, isn't it? I mean, I'm working with a co-author, and we're doing some estimations about in the shutdown sectors and the non-shutdown sectors, about the percentage of firms that can be prone to bankruptcy. And that's very, very high. And in some of the cases, in some of the sectors, in some of the size groups, it is about the 90% with a 3-month shutdown. So that means that, I mean, I don't know, but your risk assessment processes shouldn't be designed for this sort of an era where almost everyone in the sector is prone to a risk of bankruptcy, isn't it?
Yes, I mean, it makes it really difficult because this crisis, you know, we've had I think we talk about in our organisation sort of 2 phases to the crisis. You've got the organisational response phase, which was the immediate response to what happened, the lockdown, the furlough, and the likes, which was, you know, how do we enable our customers to temporarily enter into a payment holiday, to get access to their cash, to, you know, to notify us of a bereavement, all these types of things, when at the same time we've got reduced staff numbers because we've got people who are working for us who are in isolation, who are shielding, who are unable to work out of home because they've always been historically office-based. And so there was a phase where we were very much focused on that and the operational risks that came from that, and making sure that we were able to provide that support and that servicing. And we were able to do that relatively quickly through getting those people together and responding and taking action through our multidisciplinary cells. The second stage of this is the financial crisis.
True.
And that's the bit where it's much harder because this crisis is very different from anything we've seen before.
That's correct, yeah.
You know, it's not like the one in the mid-noughties where, you know, it was primarily caused by financial services and the banks, and it you know, this one has a real impact on those small and medium-sized businesses and some of the large ones, but there's a real risk that they can drag the rest of the economy down with them.
Yeah.
And even though
mainly a demand side crisis, it's not a financial sector driven crisis, it's not a supply side crisis, it's a demand side crisis, and that's very, very new.
Yeah, absolutely. And so trying to work out, you know, so my organisation is not hugely focused, it doesn't have, well, we were trying to launch a business bank, but we've had to make the decision to stop that project as a result of COVID, because, you know, we would have spent however many millions on it, but then when we'd have launched it, there'd be or a very much smaller market for us to operate in. You know, we have our margins have reduced because of the base rate cuts. Our credit risk portfolio has reduced as a result of a huge number of our customers, you know, being on furlough or losing their job or likely to lose their job in the future. And so, you know, it has a massive impact on the way that you make decisions. So it's a really difficult one because it's very difficult to model and to predict what's going to happen in the future.
Yeah, so it will, probably for a while at least, there will be massive changes in evaluation of risks or in valuations, several decision-making processes, you know, not only by the financial institutions, but by the firms themselves, maybe.
Yes, yeah, absolutely. Yes, I mean, I can't talk a huge amount around our risk assessment from a prudential and a financial point of view, because I've not been so involved in those points, but absolutely, we recognise that the decisions of our customers and the circumstances of our customers will have a massive impact on our ability to manage risks, and I guess we're trying our best to so I guess the if I was to the message that every week our top 1,000 people at our organisation have a conference call with our CEO, where he gives some very clear messaging around the stage we're at in the coronavirus crisis and how we need to be responding to it, and the things that he's sort of the key messages that he's focused on to help us when we're making our decisions throughout the organisation are the 3 C's, which are continuity, so making sure that we're able to continue to offer the services that we need to offer to our members, come what may. And we, as I said, that was our primary first phase. The second one is capital. So, as with any financial organisation, you need to maintain an appropriate level of capital, and so that's where that risk assessment from a prudential point of view comes in. And despite the fact that this is a very different crisis from what we've seen before, we are having to make some really challenging decisions about how we maintain that capital. But the way that we're doing that is by trying to cut some of the costs where we can to ensure that we can maintain the offering and the support we need for our members, because we are a much more retail focused organisation. So we, as I say, we've made decisions to cut some really material projects to enable us to redeploy that money on much more member benefit focused things, such as being able to sort of guarantee that as long as a member continues to engage with us in our collections and recoveries team, we won't repossess them this year, and we won't start any action to repossess them, which is a really important thing, because it enables our members to have that comfort they have the time to try and get back on their feet and get things back in position.
That's a very major decision, yeah.
It's massive. And the thing that our CEO talks about is character, and when making decisions we have to think about our character, because what will happen is people will look back on the decisions we made in the past and think, was that right? Was that fair? Was that decent? And so he's always said to us, we need to be thinking about it in that sense. How will people look back at this in the future? And we want to be seen as the organisation that, wherever possible, prioritises the needs of our members rather than the commercial imperative.
But it's really important for every organisation during the crisis.
Absolutely, because of the fact, because of the nature of the crisis, this is really hurting the people at the bottom, the lowest levels, and those, because and so it's really important that you're shown and that you do help support those people that have the greatest need.
Yeah, absolutely. It will be the case for every organization, I think. So it will be a manifestation of character, how they made the decisions during the crisis. And it's unprecedented, really. It's demand-sided, and it hurts a lot of people. It already hurts a lot of people. Probably it will hurt more.
Yeah, absolutely. And from our point of view, we're not offering any of the government-backed loans, because we don't have a business banking department. But a huge proportion of our customers own small businesses, work for small businesses, and therefore that's where we're focusing our attention on, ensuring that they can continue to get the support they need and can continue to stay in their homes and access their cash, and be protected by their insurance products during this crisis. even when they're on furlough, their businesses are no longer operating and the likes.
Yeah. I think it will create loyalty after the crisis. These organizational decisions, if successful, will create loyalty from clients, from employees, from everyone, if they're successful and if they're thought through. Thank you very much, Summers. I think it was a very good talk. Thanks a lot.